Hey, if you're in my neck of the woods, I know exactly why you're here. And I got you covered. I'm John Zidar, aka the Stock Wizard. This is On Top and Hot, where we like to talk about hot penny stocks. You see, I'm a day trader, and I like to trade options in stocks under $5. And I'm always looking for hot penny stocks to share with you. Stocks where we can both cash in. Well, I've got an interesting situation here that I want to share with you that comes with a hot stock, a hot warrant, and a lot of lessons for why it was hot. And we can take these lessons moving forward and cash in on this because you're going to see this situation happen a lot with market sentiment. And when I say market sentiment, I'm talking about the way you and me, the investors, feel about something, the way we perceive it, the way we understand it. Did we understand it correctly? Doesn't really matter. Whether we understand it right or wrong, the market's going to go where we think it needs to go. And that's what happened with this stock. And if you were paying attention, if you were looking for the wave, you would have caught this and been riding this all day long. So ticker COOT, this is Australian Oilseeds Holding. She finished today at $2.64. She's falling right now. She is still up over 173%. She was up a lot more than that during the day. And that right now is up, $1.67. Now, this is a hot penny stock on the major exchange. She's on the NASDAQ, which comes with benefits compared to penny stocks on the OTC. Any stock under $5 is a penny stock. Doesn't matter what market you're on. But what market you're on does matter. Penny stocks on the major exchange have no transaction fees compared to the stocks on the OTC. Stocks on the major exchange, you get to trade pre-market, after-market. You never get to do that with OTC. There's a lot more money, a lot more volume, and a lot more rules for the stocks on the major exchange than there is on the OTC. And all of that benefits us, the investors. So personally, I like to trade penny stocks on the major exchange over the OTC, but I will trade them as well. So COOT Australian Oilseed Holdings Company, what is she? She is oil, edible cooking oil. This is an Australian company that came into, I guess you'd say 1991 is when they were established, but this is when a bunch of growers got together and started talking about it, putting their heads together, figuring out what they could do. It was 1992 that they actually commissioned their processing plant and started growing from there. And right now they're doing about 36,000 metric tons annually. Now this is all being done with certifications, green energy. I mean, they're very smart doing business over there. This is non-GMO, cold-pressed canola oil, free of chemicals. A versatile oil that can be used in any style of cooking. Deep frying, stir frying, baking, or for your salad dressings, whatever it is. So that's the sort of product that this company's got. Now, I want to share something with you here to put something in perspective. This is where market sentiment comes into play. The reason this stock is hot right now is because of the tariff discussions going on with China and Trump. And in these discussions, China said they were not going to buy our soybeans, which was going to hurt us. We have lots and lots of soybeans they've been buying from us for a long time. Well, counter to that, Trump said, well, we're not going to buy your oil. Well, that started all of this off. Now, I'm not going to go into all the details, but I do want to cover a few details here with you so that we can get things straight. First off, it's not like China's the only place we can get our cooking oil from, right? It comes from corn, it comes from wheat, it comes from soybeans, it comes from peanuts, it comes from all sorts of things. And you know what? We grow all of that. A lot of countries do. So no, we're not dependent on our cooking oil from China. So it's not a big deal. But here's the funny part. It wasn't actually cooking oil, edible oils that we were buying from them. It was what is called used cooking oil, UCO. We were buying this for our diesel fuel. We were turning their oil into diesel fuel over here. Now, I don't know why we were so into that in 2023. I thought we were moving towards electric vehicles, so maybe it had something to do with something else. But the fact of the matter is, we were buying a lot of their oil And up to 2024, when Trump came in, that's the way it was. Then came tariffs. Then came rebates from China. This changed the market completely. So the fact of the matter is, not only is this not cooking oil, edible oil, like we're talking about with this company, but it's not going to have a big impact. The threat has no impact because the market has already crumbled anyways, and we can get oil from anywhere. Matter of fact, China has just gone to Europe. It's no big deal who buys their used oil, right? This is where it gets confusing because everybody was presuming it was edible oil. So here you have this Australian company making an edible oil, which is running today multiple hundreds of %. Now, as I said, it has nothing to do with edible oils. Does it matter to this company? Here's something else to consider. If America was on the market to buy more edible oils, wouldn't we buy American? Why would we go to an Australian company? Right? This is an Australian company out of Cootamundra. So it doesn't make any sense any way you look at it, and yet it's running on fire, folks. She was well over 200%. And here's the other thing I want to share with you is her warrant. When you hear of stocks that are talked about, now this stock wasn't mentioned. What was mentioned was cooking oils, edible oils, soybeans. Well, we're not going to see any running soybean companies because they're not buying our soybeans. What American company is going to surge because soybeans aren't selling, right? This oil surge is happening because everyone presumed America was in the market for more oil. Edible oil. I don't even think we are. But that didn't matter. The stock took off. Well, the warrants run with the stock. And because the warrants are penny stocks, they normally move bigger percentages. They get very excited. Well, it's falling too. Was well over 400% today. Right now, we are at 321% that this ran. Now, unless you get confused here, let me straighten you out real quick. Warrants are stock. You can buy them, you can sell them like any other stock, get in and get out, no problems, no taxes, no special permissions, qualifications, anything like that. Buy them, sell them, make your money. Great. But they are also warrants, which gives them extra benefits. That is, they are coupons. They are coupons that will be good for 3 to 5 years that allow you to buy a share of the company stock at that time at a guaranteed low price. Maybe they say you can buy a share at $1 anytime in the next 3 to 5 years. And in 4 years, the stock goes up to $20. You can buy a share for $1 and one warrant. How many warrants you got? This is how Warren Buffett makes billions of dollars. He gets lots of warrants and cashes in on the back end. Well, that's what makes these so appealing, and that's why people like to buy them. When the news comes out and the stock starts running, you normally see the warrant run too. And this ran really hard today. Now, the one thing you have to be very leery of with warrants is when you go to sell them. Make sure that the bid price, which is what you're going to get when you sell, is at the price you think you're selling for. We'll talk about that more when we look at the chart. So let's go back to the company's chart now and see what sort of relative volume was on this stock today. Holy cow, right? Look at that explosion, folks. We had less than 500,000 shares a day over the last 30 days. Today we had 181.5 million shares move. That is that's over 360 times her normal volume, folks. We're talking 36,000% increase in volume. Wow. And they misunderstood what it was all about in the first place. But does it matter? No. The gains were real. You can take them and take the money. Share structure for the company is not bad. Outstanding share count, we're about 28 million. I don't know what the insiders own, so I can't subtract it from the outstanding share count to give us our float. Now, I know the float can't be any higher than the outstanding share count, so it won't be any more than 28 million. And considering how many shares the insiders might own, it could be considerably less. Currently, market cap is also about 27 million, not taking into account the big run we had today. Financials. Is COOT making any money? I would presume they are. They are. We got 2 years of financials here. about 20 million in 2023 and 22 million in 2024, and they're bringing in between 3 and 4 million in profit. So they're black everywhere we're looking. Quarterlies were black here too. They are bouncing around, going from like 4 million to 7 million, back down to 6 million, but they are staying in the black, no trouble anywhere. Balance sheet for the company, remembering those 3 zeros behind any of the numbers we look at here. Cash and cash equivalents, we got just shy of $1 million in the bank. Total assets, we got about 20 million in assets, 21 million in liabilities. So even though the company's making regular revenues and steady profits, we are not getting any of them. We got 1.6 million in deficit that we're holding for this company. Taking a look at the news, what is going on with this company? The most current piece of news came out, about a week ago. The company announces the launch of GEO brand products on Zhongsheng Go platform in China. I just find it interesting that here we are talking about tariffs in China and oil, and the only piece of news I got here is about this Australian company doing business with China. And I really don't think that has anything to do with the stock running right now. Let's take a look at the disclosures for the company. We've got a 6K here. This goes back almost a full 2 weeks. This has to do with their financials. So if you really are interested in this company, this is where you're going to be doing your research and due diligence. Don't be running around on Google trying to learn. Just go into the most recent financial, and that'll tell you everything about the company since they incorporated. Everything. And once you learn how to read a 10K and 10Q for this company, you can use it to read any of them. They're all laid out the same. So it's information worthy of learning. All right, so that takes care of COOT Australian Oilseeds Holding Limited. You know why she's running. She's running because people misunderstood what's going on here, unless there's something I've missed. And I really don't think there is. So let's go take a look at the chart for COOT, and we're going to look at COOT W, the warrant too, which was even hotter. Whoa, that's not a weekly chart. That's a yearly chart. It's kind of self-explanatory, ain't it? This is COOT, ticker COOT, Australian Oilseeds. Got her opened up to a 1-day, 1-year chart on my free trading platform, Thinkorswim, which you can only get from Schwab. As you can see, she has not been doing much the whole year. Year ago, she was hovering around 80 cents. She warmed up here to about $1.70. Cooled down to this 52-week low of 45 cents, which she hit in July of this year. And then went sideways for a real long time in a 200 squeeze, but really not taking advantage of it, right? She's been there for days. And then today, she took off like a bat out of hell. She went from 60 cents to $4.50. And that's not true. She actually hit a high today of $5.09. I don't know why it's not showing it here. So we were well over 750% run today on misunderstandings. I don't think this company was meant to run today. I don't think anything that happened should have affected this company today. But guess what? There was money on the table to be taken today. As you can see, everything is going to the moon. All of our oscillators are pushing up. Volume is intensely strong today, and we have a rip on the chart. Coming down to our 6-month, 4-hour view, pretty much the same thing. We do see she has pops every now and then. She's worthy of hanging on to. Every 10 to 20 days you get a pop, but this is a severe pop. Big one. And she did have a drop, and she's come right down to the 9-day MA there, which is surprising. I'm thinking when people come to their rightful understanding of what's really going on with this situation, they're going to see this company's not involved, not in any way, shape, or form, and you would think it would come all the way back down, right? So right now we're watching it. She's still above the 9-day with the full bar. The wick comes underneath, we're not worried. Watch that full bar stay above the 9, and we're good to climb. So everything is still looking good here. All of our oscillators are still pushing up except our RSI, which is pulled down just a little bit. Taking a look at our 20-day 1-hour view. Pretty flat, right? We've got a couple hiccups here, but this is a rip. And like I said, I caught this yesterday afternoon. This is when you really want to pay attention. When you're looking for a wave that you want to surf the next day, you're probably going to see the news come out after 4 o'clock today for tomorrow's runs. So pay attention to the news. And normally you will see a stock run as soon as news comes out after the bell. That will be one of the stocks that run. But that's an indicator to you that there is heat in this stock. Not everybody hangs around for the aftermarket and pre-market sessions. Matter of fact, there's a lot of people that have no clue what's going on until the bell. And when the bell hits, what do they see? The price is way up here when yesterday it was way down there. What do you think they do? No, they do not go do due diligence and research. They don't care why it's up. What they care about is getting all that money right now. And that's what they do. As soon as that bell hits, they start to sell. And you normally see a big, strong pullback. And we did. She had a strong rip, double rip aftermarket, pre-market, and then she came all the way back down, and she's down at the 20 with the bar starting to come under the 20, which is an indicator to watch for her to start dipping. When a full bar comes underneath that 20, then we're going to watch for it to come down to these other MAs, which I'm still looking for right now, to be honest. Our oscillators on our hourly chart are all cooling off. You can see them all rolling downhill now, negative crossover right there. And our RSI is down there at 49. That's cool. I don't like to see it under 55. Taking a look at our 5-day, 5-minute. Flat. Doing nothing. News came out obviously just at the end of the day here. She took off from 68 cents after market, hitting $4.32. Falling back down, and you can see strong consolidation right there at $3.20. That's a very strong support right there. Off of that, she bounced, took another jump to a new high of $5.09, came down. She has been hanging on to this strong support right there at $3.20, $3.25. She is dipping underneath it right now. Now, there's a chance she could come up, but in my opinion, there is a 4 out of 10 chance that this is going to come up and start to climb again. Honestly, I don't think the company has a catalyst. I think once the fog clears and people see what's there, this is going to come back down, may come all the way back down to exactly where it was. So if you happen to get in, I would take gains right now, honestly, but I'm not a licensed broker. Don't take my advice. I'm just offering my opinion of what I would do if I was in this right now. Now let's take a look at that warrant. As I said, warrants normally run hotter than the stocks do. Now we don't have to go all the way back because we're really not interested in the history, but I'll just let you see. Not a lot of difference there, is there? No, that's because the price of warrants follows the price of the stock. Until those days when there's news and then it goes crazy doing its own thing and then it comes back home after everything settles. So what we see here is a chart that looks a lot like the parent company. She's been flat for most of the year, hitting a low back in December of 1.1 cents. And then today she took off, jumping from, let's call it 2 cents, up to a high here, it says, of 27 cents. Which is ripping, folks. That is an incredible jump there of 1,300%. Look at our oscillators. Our RSI is all the way up there at 94. That's on fire, folks. And everything is pushing to the moon. Very super strong. Now, as you can see, there's not a lot going on here. So I'm going to dive all the way down to the 5-day, 5-minute. But the real reason I'm skipping all that chart isn't because of the inactivity. I don't chart warrants because warrants don't pay attention to their charts. They pay attention to the parent stock. Whatever the stock is doing, the warrant is reacting to, not the chart. But there's still a lot of information to be gotten here, and I want you to see that. So before all this information came out, 2 days ago, the stock was down there at about $0.015. 1 day before it took off, we were here at roughly 2 cents. And then she ripped to the real high of 36 cents. Folks, that's 1,800% rip. For every $100 you had invested down there, you could have made $1,800 up there had you sold at the bubble. Now, once you hit the bubble, she started falling even before the bell. When she hit the bell, she went sideways for most of the freaking day. And then only at the end of the day did she dive. Why? I think she dove down to our brand new 200-day MA here. That's what stock prices do, even warrants. And normally they'll hang around that because there's more data in a 200-day MA than any other MA. She was hanging around the biggest one on the board at the time, the 50. Now she's down to the 200. Now, personally, I don't think she's going to run. I think she's done, but what do I know? Anything could happen. So you watch it. It doesn't cost you anything to put this on your watch list. And the bottom line here is, folks, when things are mentioned like soybeans, cooking oil, critical metals, anything, when raisins, when something comes up, look for those companies that are getting volume in those businesses. Normally, the companies that get news in the after hours today are going to be the stocks that are hot tomorrow, especially pre-market. Best plays you're going to get because there are no volatility halts pre-market or aftermarket. But if you get into a stock pre-market, you get in here and she runs real high, you sell before the bell. In 99% of the cases, if the stock is high when it hits the bell, everybody's going to sell to take their profits. So get in there, take your gains, get out. If it falls and starts to climb after the bell, you could get back in and take gains a second time. Just smarter to play it that way. Hopefully I've shared something here of interest with you, something you can put to use and make money with. Remember, folks, the more you know, the more you're going to grow. See ya.